U.S. Treasuries joined a sell-off in European government bonds sparked by weak demand for French debt, heightening a nervous mood that spilled into the American equity market. Oil soared as crude stockpiles fell, and the dollar weakened following a private report that showed the pace of U.S. hiring moderated. The yield on 10-year Treasury notes climbed 6 basis points to 2.38%, capping a surge of 25 basis points in 9 sessions. While the Nasdaq 100 index slid 1%, the yield on benchmark German bonds hit the highest since January 2016. The Stoxx Europe 600 index dropped the most in a week. Gold and silver retreated. The sell-off in bonds comes as central banks from Asia to Europe and the US have taken a more hawkish stance as they seek to remove nearly a decade of accommodation. The rise in yields has started to weigh on equity markets just as data show growth in the American economy may be moderating. European central bank officials considered when they met last month removing a pledge to increase bond buying, while ADP Research Institute data showed companies adding fewer workers to U.S. payrolls in June than the prior month. Stephen Major, head of fixed income research at HSBC, discusses the Fed on Wednesday. Minutes from the Federal Reserve showed a lack of consensus about when to shrink the central bank's $4.5 trillion balance sheet, and how to approach policy strategy. In a time of low inflation, read our Markets Live blog here. Here's what's coming up. These are the main moves in markets: stocks, currencies, bonds, commodities. Asia.